attention from entertainment news to financial news. Roger Abel from Premier Investments and Wealth Management of Iowa, joining us at the touch board this morning. You said you have one of these in your office.
I've got a vibe
Is this
board.
the one from your office? Are you taking it with you when you leave?
I'll be honest, I think mine's nicer. No, I'm teasing.
Wow, how dare you, sir. Well, you know, that's all the time we have. We're going to do 10 minutes of weather. No, come back. I'm kidding, of course. Markets have been up, markets have been down. Our focal point today, we're talking about volatility. We've talked about volatility so much, just because there's so much volatility going on.
Well, interestingly, most of the volatility now has been stripped away.
Which is a good thing.
Right. I think it's good for investors to recognize volatility always tends to revert to the mean. When volatility's high, it's going to come down. But one of the big questions we've been getting from people, the market is back at all-time highs, is now a good time to invest. And we're going to kind of myth bust some of this because because a lot of people hear buy low and sell high.
Okay.
And that happens in some things, but what we know is asset prices in the stock market, and this is a fact, prices tend to trend higher over time. So low is a relative market term. Okay. So that's what we're going to talk about in today's show. Is how do we invest at all-time market highs and have confidence to do so?
I was going to say, that's my next question. How do you know, well, this is the high, and then how do you know the high is the high, I guess, is the question.
Well, it's the high today.
Okay.
And since 1957, this is a great chart. The S&P 500, which is the broad index that most people following the stock market measure against, has had 1,200 days. 1,200 all-time market highs since 1957.
That's a lot of days.
Okay, so people think it's an anomaly. It happens on average every 19 days. So every 19 days we get an all-time market high. So
yeah, when you do the math that way, yeah.
So stock market all-time highs, it's not a flaw of the market. It's a feature.
Okay.
And it's actually a good thing, and we're going to show some evidence as to why we should be investing on all-time highs versus waiting for dips in the market.
Okay, so then, again, you're trying to, is this like hedging bets or no? Or am I thinking at this the wrong mindset still?
No, it's not hedging bets.
Okay, that's why I'm
It really comes down to some basic principles of just continually investing regardless of where the market's at. And it's because asset prices tend to trend higher over time. I always play this quiz with people. If you could go back in time to 20 years ago, how much money would you have put in the stock market?
Oh, a ton.
Everything you could afford to.
Absolutely.
And in 20 years, it'll likely be the same thing. But this is a great chart, and this shows the difference between an individual investor, the blue, investing at all-time market highs versus what we would call, all-time market highs. The light blue is a dip investor.
I told you you'd love the both.
I know, I love it. They're waiting for a dip in the market. The individual who just says, hey, it's an all-time market high, I'm not scared to invest here, outperforms on average by over 10% over a 5-year period of time.
I'm going to ask you the same question, Roger, that I always ask you. How do you avoid the noise? How do you separate the wheat from the chaff? And everybody's like, oh, it's bad, now it's good, now, but it's not going to stay good. So how do you mute all that?
Well, it's three really primary things. One, you have to have a media filter. You need to tune out the noise. And I'll play this little quiz on you. If you only opened up your quarterly statement, so the end of March statement and your end of June statement, how do you think you felt?
Probably good.
Good, because at the end of the first quarter, the market was up.
Yeah.
You didn't open up your April statement when all the chaos happened. You opened up your your June statement. Oh, you're like, we're up 6% year to date. We're doing pretty good. So tune out the noise. Another way, a really good technique to help tune out the noise is if you're concerned about investing at an all-time market high and you just can't stomach it, set up what we call a dollar cost averaging plan. It's where you're just putting money in a little bit over time for a long period. Most people are already doing this. They're doing a 401k. They're doing this principle, but this will help even out the ups and the downs in the market and give you a nice average cost per purchase.
Is this like a Ron Popeil set it and forget it? Just, all right, every month you're doing this then, or is it something you have to actively be participating in?
If you're working with an advisor, they'll help you set this up. I would tell you most successful people, even really wealthy people, this is what they do. I think there's this fallacy that wealthy people invest differently. That's not what they do. They have a very systematic investment plan that allows them to achieve really great success long term.
All right. So you're using the dollar averaging, and then let's talk about the market cycle as well.
Yeah, I mean, we don't know what the market cycle is going to do. Asset prices tend to trend higher. So one of the things you can do is focus on what you can control, not what you can't.
Okay.
There's all these things out there. You can't control what the stock market does. You can't control an election. You can't control, the weather today. It's already 88
Don't
degrees.
tell people that we actually can.
Live in the world that you can control, which is your savings rate, your spending, how often you're investing, your asset allocation. Live in that world, and it'll give you a lot more confidence when you sit down and put together an investment plan.
And take control by getting in with somebody and getting somebody on your side who knows what they're doing. And you can do that by doing this right here.
Yeah, and we actually just rolled this out. It got approved yesterday. We
Nice.
will have hard copies. I stopped in the office before I came. They're not here. But it's actually our guide to investing at all-time highs in the stock market. And we thought it was important to give people some comfort and say, hey, it's okay. It's not a flaw. It's a feature of the market. And it's actually beneficial to just stick with your investing plan and stop trying to time the market.
And to get in touch with you or anybody over there at Premier Investments and Wealth Management, what's the best way to go about it?
There's 3 ways. 800-383-6590. You can go to premieriwm.com. Once we get the hard copies in office, if you want to stop by, we're at 3600 First Avenue.
Will you sign them? Will you be autographing them?
I mean, I could. I don't know if it's worth anything, but I'll do it for somebody.
Be. I'd put it on my mantle.
I mean, I'll autograph for you if you open an account.
I'll absolutely do that. Nothing from nothing means nothing. Always good to see you, my friend. All their details at kcrg.com.